Hey everyone. All right, so my account statements have arrived and it's time to do the 2016 annual review. So I'm going to go over my trades from 2016. Here we are, January 12th, early 2017. This is a good time to look back on what was a fantastic year of trading. Now, as many of you know, 2016 for me, I was able to lock in over $222,000 in profits. And I've got the broker statements right here that's going to show those gains. Now, the only thing that I removed from these broker statements is my account number. I blurred out the last four digits and I removed my address, but everything else is the same. So we're going to go over this. I'm also going to go over my statistics for the year. I imported all of my trades into TraderView so you guys can see what I was doing right and what I was doing wrong. Now, I'm going to live broadcast this, so those of you tuning in right now, welcome, and I'll be able to answer questions as we go. And I'm also going to archive this to upload to YouTube and to post as a podcast. So you guys can listen in a number of different places, and you can all email me with questions if you're watching a recording or listening to a recording, ross@warriortrading.com. All right, so the agenda here is we're going to start by looking at broad brush strokes, the big picture of my 2016 trading year, how I did, the numbers, and everything like that. And then we're going to get into answering the question of how did I do it, because that's what you guys, I'm sure, want to know. And I'm also going to talk about some of the challenges that I faced during 2016. We'll talk about the peaks, but we'll also talk about the valleys. And then I'm going to lay out my goals and my projections for 2017. All right, so first let's jump in here and look at the big picture. All right, so the review of my statistics. Now, the big picture is I finished the trading year with $222,244.91 to be exact, on 777 total trades. Now, I'm going to go, for those of you on screen share watching the recording, I'm going to log into my Speed Trader account where I'm going to be able to show you the actual statement. So I'm going to log into that here. Those of you watching on Facebook Live, you're going to see me holding my statement. So let me go here. So I'm going to go over to online documents, and I'll show you guys what we're looking at here. So we've got online documents. So I'm going to go to statements right here. And then, let's see, I'm going to click my December 31st statement, click here, and download. There we go. So opening this PDF. All right, so this shows my ending balance, ended the year with $28,000 in the account. And I'm going to go here over to page 2. Let's see. How do I go to page 2? There's page 2. So finished the year $221,728.85. Now, I actually asked Speed Trader why this is about $500 lower than my export into TraderView, and they said they're going to look into it and get back to me. So I'm not 100% sure why there's a $500 discrepancy, if it's from wire transfers. This right here is my TraderView report where I exported every single trade from 2016, and this was the total profit, $222,244, and that includes commissions and everything like that. So it's possible that these are, I'm not really sure what the fees are. Now, I noticed on this statement over here, let's see, let me scroll up. Where is it? This has a line item for other transaction. Yeah, here it is. So this has a line item right here for other transactions, and it's $92.16. And I'm not sure what that's about. You can see I did a wire transfer. I took out $69,000 at the end of the year. But this $92.16 is a little bit of a mystery. So in any case, I'm asking for clarification on that, but that's a fairly small discrepancy versus $222,000. So it's off by 500 bucks, but the big picture is still pretty close to the same. And these are all the trades they imported. So when I get an update from Speed Trader, I'll let you guys know what those, if there's fees or what's there that I'm not aware of. And this is my printed out statement here, which again, the only things that I removed were my my address and the last digits of my account number. So I finished the month of December with $21,987, which was not bad, not a bad way to finish the month, and then finish the year just under 222,000, according to this, which again, I'm not sure why it's a little bit off. So the big picture, it was a good year, made some good money, and I did it trading 2 hours a day, and that's it, only 2 hours a day. So, when you look at these statistics, how does it break down? Well, my accuracy is 66%. And those of you that see TraderView, you can see here the accuracy is 66%, and my profit loss ratio, my average winners were $711, my average losers were $56. So $556. So that gave me a profit loss ratio of about 1.3 to 1, which is not bad, but it is a little lower than what I strive for. I usually like to have my P&L or my profit loss ratio closer to 2 to 1. And that means if I risk $100, it's because I stand the potential to make 200. If I risk 1,000, it's to make 2,000. So based on this, I was risking 1,000 to make 1,300 basically. So the profit loss ratio is a little bit tighter, and that means that my accuracy needs to be higher. Now, if you trade with a 1-to-1 profit loss ratio, your accuracy, anything above 50% is profitable. So, as you increase accuracy or you increase the ratio, you can make more money. And so, that's kind of the big picture. Now, interestingly, and I'll show you guys who are watching on Facebook, my average hold time for winning trades was 8 minutes long. My average hold time for losing trades was 6 minutes long, and my average hold time for scratch trades that were break even was less than a minute. So this is basically the breakout or bailout mentality, that when I got into a trade, I was expecting almost immediate resolution, and if I didn't get it, I got out. In all of 2016, I only had 5 consecutive losses back to back. I had 15 consecutive winners back to back. Now, my total commissions, $10,750 in commissions, and $14,916 in ECN fees. All right, so ECN fees, those are your routing fees. So that's a total of about $25,000. Now, I'm showing you my P&L here as net. If I show it to you as gross, you'll see this jumps up to $247,000. $247,000 was my profit before commissions, right? But no one's really looking at that. You're looking at the realistic profit, which is how much you made after commissions. All right, now let's look at the breakdown. What day of the week did I make the most money? I made the most on Mondays and Wednesdays, and I made the least on Thursdays. Despite today being a Thursday and it actually being a great day, statistically I make the least amount of money on Thursdays and I make the most on Mondays and Wednesdays. So interesting distribution there. Performance by time of day. I made the vast majority of my profits between 9:30 and 10 a.m., the rest between 10 a.m. and 11, and a small amount between 11 and 12, and very little afternoon. Telling you again, I trade the first 2 hours and then I'm done, right? If I'm not profitable in the first 2 hours, I'm done. Now, this here shows you that I actually, I took trades between 10 and 11, but I didn't make nearly as much money on it, right? They were not as profitable. I took some trades after 11, and those ones were almost scratch in total over the entire year. All right, now we can look here, performance by the month of the year. So January, 10,000. February, 3,900. Pathetic. March, 8,400, better. April, 19,000, good. May, 4,800, pathetic. And in May, that's when I decided that I need to turn things around, and I set a new game plan for how I would trade during the summer. I'll talk about that a little bit more in a moment when I talk about how I did it. But the result was that in June, I made $34,000. In July, I made $32,000. In August, I made $29,000. And in these 3 months, I made $94,000. And then I was interviewed, and that interview appeared on the Huffington Post. I'll give you guys the link to it. September started declining profits. And honestly, in October, I was like, what's going on with this trend? I've made less and less money each month since June. And then I bounced back in November. Good month in November, decent month in December. So the overall average, about $20,000 a month for all of 2016. And the first 4 months, the first 5 months were really nothing to be impressed with. It was the second half of the year where I really surged forward and started producing some good results. 100% of my trades were intraday. I didn't hold a single trade or a single stock overnight in all of 2016. All right, performance by intraday duration. I guess this is the amount of time I held the trade. So, as you guys know, trade times were pretty short, between 1 minute and there were some I guess as long as a couple hours, but I don't even really remember which ones those were. All right, so now let's look at price and volume. So here, this is the awesome thing with TraderView is that you can break down all your statistics. So the price, performance by price, stocks under $2, not a lot of money. Stocks between $2 and $5, $120,000. Stocks between 5 and 10, 71,000. Above $10, only 9,000. Between 20 and 50, I lost $3,300. And above that, just scratch. A couple small winners, small losses. So again, my wheelhouse is stocks between $1 and $10 for sure, but really between $2, $3, and $10 is ideal. All right. Now, performance by volume, it makes sense that I made more money when I had larger shares and when I traded more volume on the stocks. So this is total volume between buying and selling. If I bought and sold 5 times in a day, that's my total volume on the day. Performance by the in-trade price range. So I guess this must be performance by in-trade price range. I'm not sure exactly what that means. I'm not sure. Trade distribution by volume traded. These are another kind of miscellaneous stats. Lots of stats here. Not all of them are incredibly important. Now, this is the breakdown. Stocks I made the most on and lost the most on. My biggest winners, MPET, HMNY, SKLN, LEDS. These are these are cult classics. We all have been trading these all year long. MOC, GLBS. I got a shipper stock in there. I don't have DRYS on the top 20. OPTT, Cool, SPU, Cone, LEI, JAGX, HPJ, Tops, Cool, RESN. Those names are probably familiar to you. Now on the downside, APTO, $7,800 loss, brutal. TANH, 4,700, brutal. SHIP, NVFY, KPTI, CERC, BOSC, PACD, ELMD, CPXX. So, these are the ones that I got smoked on. Distribution of instrument by instrument volume. So, where did I make the most money relative to the amount of volume that the stock was trading? Now, even though I trade low float stocks, I trade them when they have volume. So the majority of my trades are on stocks with at least 500,000 shares of volume, and most of them you can see were between 1 million and 2.5 million, 2.5 and 5 to 10, and then as it gets over 10 million, I usually start to trade less. But I did still trade some of them. I traded more stocks over 25 million shares of volume than I did stocks under 250,000 shares. And interestingly, the stocks with low volume, I lose money on. You can see right here. Those low volume stocks, they don't serve me well. And as we increase in volume, I made the majority, the most money on stocks trading between 5 million and 10 million shares of volume. All right. Now, I also made the most money on stocks with super high relative volume. Look at that, 500%. $184,000 of profit with stocks trading on 500% and higher relative volume. That's pretty interesting, right? That's what we're talking about. That's 5 times relative volume. So in a few minutes, when I talk about how I did it, this is what we're going to be talking about. Finding those stocks that are going to have high volume. All right, some more stats here, but these ones are not necessarily as important. So we'll scroll back up. Market behavior, this for me is not particularly helpful. Performance by the movement of the SPY. Majority of my gains were when the market was between 0 and 1%. When the market was up more than 1%, I lost money. When the market was down, I still made money. That may or may not be really any correlation, may just be a coincidence. So some market behavior stuff, win-loss expectation, accuracy 66.5%, win-loss, so $366,000 in total gains. That's great. $144,000 in losses. I could have done without that, but you know, that's not what trading's about. And this right here is my total equity curve over the year. So remember how it was slow those first couple months into May, and then finally I was like, okay, Ross, it's game time. You know, get your head in the game. Let's really grow this account. And that's when I took off. You know, a couple slow months right in here. It was a little slow through October, but then surged up into November and December. And you know what? This is what almost everyone's equity curve looks like. It's not straight up. It's a little bit sideways and then a boost up. A little more sideways, another boost up. This is totally fine. Now, something that's interesting to see here is the cumulative drawdown. What does that mean? These are the biggest red days I had. Now, notice I didn't have a single red day until February of 2016. Pretty good, right? I was on a 58-day hot streak. I wasn't red. I didn't have a single red day between November of 2015 until February of 2016. So when I started hitting some red days, they were like down 1,500, no big deal. And then in May, I had a couple of bigger red days, down 4,600 there. And that's when I was like, I really need to get myself focused. Even in June, though, I had a big red day, $4,700 in the red, 4,500 there. And then, you know, these days, basically as my size increased, the wins were bigger, but the losses were bigger also. Worst day of the year was down $10,000 on October 20th. That was my biggest drawdown of the year. And that was a day I'm not particularly proud of, but is part of the deal with any trader. You know, we sometimes push it a little bit too hard. I pushed it too hard on that day and I got smoked. A couple other red days, 6,100 and 6,900. And the thing is, you know, honestly, after all these years of trading, I used to get really beaten up about the red days, and none of these red days really bothered me because I wasn't breaking the rules. Maybe I was getting a little aggressive, maybe I was taking bigger share size than normal, but for the most part, I wasn't doing anything wrong. All right, so now let's go up here. I'll show you, the last thing I'll show you here is, I don't know if my win-loss days are particularly helpful. Not too helpful. TraderView software, by the way, for those of you asking on the Facebook live stream. So check out, this is my calendar. This is how I traded. 100% green in January. That's a month to really be proud of. February, only 2 red days. March, I had 4 red days. April, only 1 red day. May was pathetic. 2, 4, 6, 8 red days. It's pretty bad. June, not bad. July, only 2 red days, not bad there. August, a little choppy. September, a little choppy. And then going into the very end of the year, October, November, and December, each around 4 to 5 red days out of the month. And that for me is really pretty, I can accept that. I can accept having, a couple red days a month. Maybe 1 red day a week is kind of what I budget. More than 1 red day a week starts to feel a little excessive. And you can actually see here in January, I like to make fun of myself, but right before the holidays, I go in on a 3-day losing streak. It's like Merry Christmas to me, right before the holidays, before I'm going to spend time with my family, and they're like, "Oh, Ross, how's work going?" It's like it's going horrible. I just lost 3 days in a row. I'm pathetic. You can't help but feel that way, and I always do that before the holidays. And if I trade on my birthday, guaranteed I'm going to lose money on my birthday. I don't know why it happens, but it's the worst. So I highly recommend scaling down on your trades when it's the holidays. And you know what? I should have scaled down anyways because people get ready to go away. Not everyone's around, and there's less volume in the market. It's just kind of the way it seems to be. All right, so those are my statistics for 2016. You guys saw the detailed breakdown. I showed you some of the days, the price, the relative volume, and the stats of the trade. So, in total, I finished the year in really good shape. I was really happy with my trades. And yes, there were a few days where I got overly aggressive. I pushed my luck, but I didn't have any days where I really, really broke my rules. Now, I've talked in the past about the worst day I ever had as a trader. The worst day I ever had, I lost $30,000. It's a lot of money to lose in one day. And I was down $4,000. I was having a bad day. And instead of throwing in the towel and saying, "I'm done, I'm going to walk away," I kept trading. I saw a stock spiking up on breaking news. I jumped in it with 100% of my account, and it ended up being one of those, fake news, just spikes up, goes all the way back down. Boom, gone, just like that. Doesn't take much. It really doesn't. It takes a moment. It's only a momentary lapse in judgment before you can really blow up your account. Fortunately, when that happened, my account was large enough that it didn't, I didn't blow up my account, but I certainly lost more than I would have liked to have, and it took a long time to bounce back from it, emotionally more than anything else. Financially, I was able to bounce back fairly quickly, but emotionally, I think that it was a loss that changed me a little bit. All right, so I'm going to jump in here. For those of you watching on YouTube, I'm going to put this back into our slideshow where I kind of break down a couple of the ways that I was able to have such a good year and the things that I had to do in order to produce these types of results. All right, so 2016, over $222,000 in profit. So how did I do it, right? That's what everyone wants to know. Whether you're a beginner trader or you're an experienced trader, what did I do that allowed me to make over $200,000 trading for 2 hours a day? It's pretty simple. For me, my success, it all comes back to risk management. And right now, as many of you know, I started 2017 with a small account. I started with $583. That's how big my account is right now. And with that $583 account, I'm now up 527%. I'm up to a balance of $3,600, and I'm on day 8. I'm doing pretty well, 8 days in. And it all comes down to risk management. I've taken a total of 25 trades in that account, and I've had 25 winners. I get into stocks that I have 99% conviction in, and I set a tight stop. If it does go against me, I'll stop out for a small loss. But if it goes up even 30 cents or even 20 cents, I'm going to sell half and adjust my stop to break even. And that means I'm guaranteed to have a small winner. Even if I stop out the rest of the trade break even, I'll have a small winner. All right, so it all comes back to risk management. That's how I mitigate risk. Now, you guys know, if you're interested in day trading, that the majority of traders out there will fail to make money. I'm sure you guys have heard only 10% of the day traders who come into the market will actually be successful. Now, I think that 90% of the traders out there fail not because they're not trying hard, not because they don't really want it, but because they don't have a strategy or a framework to base their trading on. They don't have a plan. And every trader needs to have a plan. My plan is really built on a foundation of risk management. So if you know that 90% of the traders out there are going to fail, really what you have to do is figure out, why are they failing? And what can I do differently from all of them? Well, for me, having worked with thousands of students over the years, I can really tell you without any doubts that the leading cause of failure is an inability to manage risk. So what does that mean? It means that traders get into trades and they don't know what their max loss is. So, let's say they buy a stock, 1,000 shares at $3. It drops down to 250, they're down 500, and instead of selling it, they just keep holding it. And I've had people, students email me, ask me, Ross, what should I do? I'm down $400 or $500. And the first thing I say is, well, what was your max loss on the trade? And usually they say, I don't know. So a trade is not a trade until you know what you're risking. It's all about risk and reward. You risk 500 to make 1,000. You risk 1,000 to make 2,000. So what is that? That's risk reward ratios. That is the profit loss ratio. Now, for those of you that are looking at the screen, you can see if you trade with a 1-to-1 ratio, and I'll show you for those of you watching on Facebook, if you trade with a 1-to-1 ratio right here, your break-even point is 50%. If you're right half the time, you'll be break-even. Now, that doesn't include commissions. So for me, I wasn't trading with a 2-to-1 profit loss ratio. I was trading kind of right in between these two. So my break-even was lower than 50% and higher than 33%. So maybe somewhere in the just below 40%, let's say. All right. I guess a 1.5 to 1 profit loss ratio would be like 41%. So somewhere right around 41%. Anything better than 41% accuracy, I'd be profitable. So I traded with 66% accuracy, which is really good. That's great. Now, a lot of traders will be like, oh, Ross, hey, I trade with 88% accuracy. Well, that's great, but that's only one side of the coin. That doesn't tell you the other half, which is what's your profit loss ratio. Because you could be a trader who's right 90% of the time and loses money. And in fact, that could be me. Let's hope it's not. But that could be me in my share trader account. I've taken a total of 25 trades. But what if I lose $4,000 on my 26th trade? I'll be a trader who's right 98% of the time, but is losing money. So it's not all about your accuracy. It really, at the end of the day, comes down to managing risk. And what I learned on that one day when I lost so much money is that one lapse in judgment can put you out of the game. It can end your career. I've talked to traders who lost hundreds of thousands of dollars in a single day, doing something just stupid. I mean, we admit it was stupid. It didn't make sense. It was a bad thing to do, and that's it. And you look at a stock like DRYS, just for instance. DRYS, as illogical as it sounds, went from $4 all the way up to $120 a share over the course of 4 days. Now, what if you're a guy who shorted this and just decided to get stubborn? You short 10,000 shares at $10, you could lose $1 million on a trade like that. I mean, you really could. It doesn't make any sense. It's not logical. This thing has come all the way back down to, $1 down here. But if you couldn't remain liquid through this squeeze, you'd be blown out of the trade, and that would be it. That would be the end of your career. So regardless of, what you think a stock should do or what you think the fundamentals are, if you want to be able to make, $200,000 in a year, you have to manage your risk on every single trade. That's what it is, risk management. So that means you look at a stock and you ask yourself, first of all, what's my risk on this trade? What's my max loss? You need to know your max loss. Once you establish your max loss, I have a lot of different things I look at, but you look at support, stuff like that, the low of the last 5-minute candle, moving averages, etc. You say, okay, well, this is my max loss point, $200. All right, well, if I'm going to risk 200, do I have the potential to make 400? If the answer is yes, I take the trade. If the answer is no, I don't take the trade. Now, for me, I trade 2 hours a day, and one of the reasons is because I get decision fatigue. Every time I see an alert come up on my scanner, I have to make a decision, and it's an important decision. I have to decide, am I going to buy this stock? What's the risk? How much risk am I willing to take? And every time I do that, it drains me just a little bit. More and more and more and more until by 11:30 noontime, I'm like, I'm done. That's it. Throwing in the towel, I'm done for the day. If I try to trade through the afternoon, my ability to make a good decision has declined so much that I get sloppy. I learned that in 2015, and it's why in 2016, I made the decision to trade one strategy and to focus on only trading from 9:30 to 11:30. I said, stop trading the afternoon. Don't worry about it. There's people in the chat room that want alerts, stuff like that. Don't worry about that. You got to focus on you. You got to focus on the strategy that works the best for me. And you have to lead by example. And that's what I'm doing. And that's what I did all of 2016. All right. So the first secret to my success last year was risk management. Even though I had a few trades where I blew out my max loss, that happened for the most part because I had too much size. There were a couple of trades where I took 15,000 shares and I lost 30 cents. That's a $4,500 loss, and it happens really fast. Now, there were also trades where I took 18,000 shares and made $12,000 like that. Risk reward, okay? The trades where I lost 4,500, I had the potential to make 8,000 on. And that happened on several trades, but on some of them, inevitably, I lost. And the one day that I lost 10,000, I took two trades like that at the same time. I lost on both of them. It was a bad day. It wasn't fun, but I bounced back. And by the end of the week, I was actually back. I was almost back to break even, as if the day never happened. So the ability to get back on the horse and bounce back is important. All right, now, so if the first secret is risk management, the second is knowing the right type of stock to trade, stock selection. This is something that traders ask me all the time. Russ, how do you choose the stocks to trade each morning? Do you trade penny stocks? What's your routine? And for me, my routine is very, very simple. Now, one of the biggest things that I learned as a beginner trader when I was first getting started, I realized that almost every single day, there's a stock that moves 20 to 30%. And that's true, almost every single day. Today, we had a couple stocks that moved over 100%. So at a minimum, there are at least one or two stocks every day that move 20 and 30%. If I could find a way, this is what I told myself, to profit on those types of stocks, to find those stocks before they make the big move, then I could potentially start growing my account. If I put, let's just say, I put a quarter of my account into a stock and it moves 20%, then my account's going to go up 5% a day, right? I mean, that's pretty good. The logic makes sense. I just need to find those setups before they make the big move. What I realize is that the stocks that make those types of moves all share several common denominators. It's the anatomy of a home run stock. And it took me a long time to figure this out. I had to really print out lots of stocks, go over all of their stats, and try to figure out what do these guys all have in common. Well, all the stocks that make these huge moves, the ones that make the 100% moves, they all have a lower float. They've got a limited level of supply. So low float stocks are exponentially more volatile than heavier float stocks. Now, I spend a lot of time talking about float and going into the details of it on our website. I've got a couple articles about it, other videos on YouTube. So if you're a little unfamiliar with that term, you can do a little research and I could show you some more info on it. But float of under 100 million shares, that's my threshold. I won't trade anything above that. And I prefer below 30 million, below 20 million, and below 10 million. Those stocks become exponentially more, have exponentially more home run potential. So that's number one, low float. Well, that tells us that a stock has a very limited level of supply. Supply is only helpful when we have high demand. So that's the second part of the equation. We've got supply on the one hand, and then we've got demand on the other. So what creates high demand? High demand is the result of news. When a stock has news overnight, and it could be, headlines like, FDA announcements or releasing clinical trial study results, or for biotech stocks, or it could be a company that has a new contract, or it could be EPA announcements like Fiat Chrysler's having right now. Anything like that, earnings. These are fundamental headlines, and these can make a stock move. It can make traders think, wow, there's a reason for me to want to buy this stock. I want to get into it, as quickly as I can. All right. So now here's the thing. If you go on, Market Watch or something like that, you'll see that there are stocks reporting news all day long, every day. So how do you know which ones of those are actually worth caring about? That's a good question. Instead of manually searching through all the headlines, I take a different approach. I look at the stocks that are already moving up 5% or more. If they're moving up 5% or more, it tells me that other traders are already seeing an opportunity, but it's not too extended yet. So let me look at that, and now let me go figure out on these small handful of stocks, what's the news. So instead of looking at the news on every stock on the market, I look at the news on the stocks that are already up 5% or more. But of course, I only look at the news on the stocks up 5% or more if they have that low float. So, one thing builds on the next, and that's how I start to filter down my watch list each day. Stock selection. It's about finding the needle in the haystack, and it's not hard when you've got the right tools. So I've got a set of scanners that I use. I scan the market every day to find these stocks with home run potential. So once I've published my watch list, which I publish for my students every day, I usually have 4 to 5 stocks that I'm watching very closely. And there's a very good chance that those 4 to 5 stocks will move 20 to 30% today. The question is just whether or not they'll be easy to trade, whether or not I'll find a good entry, whether or not they're going to move that way to the upside or the downside, because sometimes they fake you out and go the other way. Now, when a stock starts moving, I have another set of scanners that will alert me whenever a stock with a low float and high relative volume that's up more than 5% is hitting a new high of day. So I can take those stocks, maybe they're already on my watch list, maybe they're not, but I can take those alerts, and now I look for my entry. And one of my favorite patterns is the very simple bull flag pattern. It's so simple, and you don't have to overcomplicate it. I've met so many traders that they put all of these indicators on their charts. They make it super, super complicated. They've got, histograms, and they've got oscillators, and it becomes so busy, boxes and windows and all this stuff. Well, I made $220,000 last year, and my charts are very, very clean. All I really have are moving averages. Now, I put the Bollinger Bands on there sometimes for when I'm trading reversals or pointing things out to students, but I keep my chart simple. And I don't look for technical indicators to give me confirmation. I look for candlestick patterns, because those really are one of the most respected indicators out there, candlestick chart patterns. And in my experience, they have the cleanest and most predictable resolution. So when I'm looking for a bull flag, looking for a stock that's made that quick move up, and then I look to take the first pullback, and you can see right here, there's our bull flag. The move up, right here, first candle to make a new high after the red candles right there. That's my entry. Stop is at the low, for those of you watching on Facebook. I do that a couple times a day on home run stocks. I did it today on a couple stocks. It's just the same thing every single day, looking for that same pattern again and again and again. Earlier this week, I had an $11,000 winner trading off my scanner, buying the first pullback. You guys can see right here, this was DFFN. Very, very simple. It was on the scanner. Here's the alert telling me it's hitting new highs. It's a low float. It's got the big rate of change. There's $11,000 in profit. One and done. One trade. If I have 10 days this year where I can do that, that's over $100,000 in profit from 10 days. There are 250 trading days in the year. That means if I have a home run, 5% of those days, I could make over 100 grand. So in between those home run trades, I've got to be really diligent not to give back profits. And that's why my equity curve, I want it to look, big boost up, a little sideways, big boost up, a little sideways, rather than sharp drawdowns. All right. I don't want to have those big red days. I don't want to have those days where I give back a lot of profit. Now, I've already had, a couple red days in my Speed Trader account this year, but Sure Trader is 100% green. So that's my focus. Trading the small account is really the most important thing to me, because it's showing students that you can make a living with an account as small as $500. I'm proving it to myself also. I've never traded with an account this small. It's a very small account, but the fact that I've been able to grow at 527% in 8 days tells me that, yes, this strategy is scalable all the way down to a small account. Now, will I make $220,000 this year? I'm not sure about that, because I'm trading from such a small starting balance. But I do think that I'll be able to make more than enough in this account to be able to say I'm making a living as a trader. And I think anything more than $1,000 a week, $52,000 a year, you're making a living as a trader. All right. So, those were really my three secrets to success in 2016. Risk management, proper stock selection, and trading the best chart patterns. I don't overtrade. I trade breakout or bailout. If it doesn't work, I get out of the way. I don't overstay my welcome. Even if I'm red, I shut it down at noontime. And that level of discipline has served me really, really well. Having said that, 2016 did present some challenges, as you guys saw from the first few months. January, February, March, April, May, I really wasn't doing nearly as well as I wanted to be doing. I was disappointed with the way I was trading, and I was getting a bit frustrated with myself. What was my problem? My problem was over trading. I was trading too much, and I'll show you right here. This is what one of those days looked like. All right, this is a day where I took 6 trades and I was red on 5 out of 6. Accuracy was just pathetic. My commissions were $490. This is over trading. This is sloppy. Now I had at that time an $86,000 balance, and so I could say, oh, being down $2,000 is no big deal. This is totally unnecessary. And again, if you do this 10 days in a row, you're down $20,000. Right? Now, I also want to point out, just for the sake of it, that I'm doing something here that a lot of traders don't do. I'm showing you a loss, not just, a red day, but a day that was pretty embarrassing. The accuracy was horrible. Now, I do this kind of thing because I want to show you guys that, this is the life of a real trader. I mean, I have great days, but I also have bad days. And I want to be transparent about that. I mean, not just to show you the broker statements, but to show you that, there are going to be days where, despite your best efforts, you do things wrong and you don't come out on top. Now, on this particular day, the $3,400 loss was on CERC. It was unnecessary. I was already having, a bad day in terms of accuracy, and then that trade just, wiped me out. And I had a $2,000 winner on that day. So it's like I had a good, a good trade here, but I remember I had that trade, and then I chose to take this trade on CERC because I was a little annoyed about the fact that my accuracy was bad. And I was a little annoyed about the fact that I only made $2,000 on OPGN, even though I was up over $5,000 on that trade. I let my emotions get the better of me. I decided to jump into a trade, and I promptly lost $3,500. I went from being up, $1,500 to down $2,000. I would much rather close the day green, especially up $1,500 than down, $2,000. So, when I had days like that, it was a wake up that you need to be more focused. You need to be more disciplined. And it's not to say this didn't happen to me, in the fall and through the summer. It did happen from time to time, but it was happening a lot in the spring. And that's when I decided that I needed to adjust my focus. I needed to create a set of rules, a framework for how I would trade the market every single day. Now, I'd already created the rule of I'd only trade the first 2 hours, and that was going well, but I had days like this. So one of the rules that I put in place was the $1,000 max loss. If I'm down, and I have this even to this day, if I'm down more than $1,000, I cannot initiate a new trade. I called my broker and I said, hey, can you set this up for me? And they're like, Ross, we're happy to do that for you because we don't want to see you losing money. They're happy to do that. They want to see me trading there for the next 30 years. That's good for them, right? Commissions, every day. So they want to do anything they can to help me, improve my trading. And so they said, sure, we'll put a max loss of $1,000 on your account. Now, it doesn't mean you can't lose $5,000 in a single day. You can, but once you're down more than 1,000, you cannot take a new trade. Now, I'll explain the way that I got around that a couple times. But by doing that, for the most part, it forced me to walk away. So it's when I started to get impulsive and emotional, it just nipped that right in the bud because I couldn't act on it. And I talk about how if you're a race car driver, let's just say for instance, you're a race car driver and you have a day where you really push it and you spin off the track and you screw up your car. Well, you can't go right back out on the track. You've got to go repair your car. You've got to get stuff fixed. And that forces you to reflect on what you did wrong. Think about it, cool off. As a trader, we don't have that. You can screw up and lose $1,000 and then jump right back in there and lose another 1,000 and then another 1,000, another 1,000, and you can keep doing that until your account is gone. Really, you could blow up your entire account in one day. A lot of traders have done it. And it's a scary thing to have that kind of responsibility. And again, you have to respect the risk. Now, for me, adding this $1,000 max loss has helped me control that. The one thing that it's allowed me to do, or encouraged me to do on a couple of occasions, is hold a losing trade, knowing that when I press the sell button, I won't be able to take a new trade. And sometimes in the first minute of the day, I'd take a trade and instantly be down $2,000. And instead of closing it, I'd say, well, maybe I'll hold this for a second because I know when I close it, I'm out of my account for the rest of the day. Maybe I'll hold it for a second. And even if I have to hold it down a couple $1,000, I'll hold it until another setup comes. And then maybe that one will get me out of the hole. The day I lost $10,000, that's essentially what happened. I was holding one trade really heavy, got into another one, and I lost on both of them. So the $1,000 max loss is not foolproof. Yes, it prevents you from initiating new trades, but doesn't stop you from doing stupid stuff. It comes back to holding yourself accountable and following a set of rules. So in June of this year, for June 1st, I created a set of rules. The rule was I would only take A quality setups, but when I saw an A quality setup, I would take 2 times the regular share size. So instead of taking 2,500 shares, I would take 5,000 shares of an A quality setup. The result was that before I would take a trade, I would feel a little bit nervous because I was like, oh my gosh, I'm risking more money on this trade. That forced me to be more selective about what I was willing to trade. And inevitably, my accuracy improved. At the end of that month, I made $34,000, just under $35,000. That was my best month of the year of all of 2016, and it was by implementing that rule. Now, I kept the rule of being down more than $1,000. If I broke that rule, I made myself run. Now, I started by making myself run a mile for every rule that I broke, but that kind of backfired because I sometimes would make that, that quick risk-reward decision and say, you know what, I'll run a mile for this rule break. So then I changed it to if I broke any rule, I had to run 5 miles. And I stopped breaking rules pretty quickly because running 5 miles, especially in the rain, is not a lot of fun. Now, at the end of the summer, in 3 months, I made $94,119 in fully verified gains right here. You can see for those of you on Facebook. So those are my gains at the end of the summer. Accuracy, 66%. I did have my biggest winner and my biggest loser during the summer. I was stepping up to the plate and swinging hard. So when it connects, you've got a big win, and of course, when you strike out, it's a pretty big loss. But the result was I had a fantastic summer. And at the end of that summer, I was interviewed, and that interview appeared here on the Huffington Post. Day trader makes $94,119 in 3 months. So I finished the summer feeling really more confident than ever. I was like, I've got this. I'm really trading smart. I'm making good decisions, and I'm making more money in short periods of time than I'd ever made before as a trader. And that was the result. I also learned how to increase my size, how to be more aggressive. So when I had green days, I would make a lot more. I would really capitalize. And that was me essentially putting the pedal to the metal. What I found is that when I'm having a good day, I need to go hard and push hard. I need to dig deep, be aggressive, and really step up to the plate. And today's one of those days. Today I traded 6 stocks in my small account, and with a $1,896 balance, I made $1,761. I made 92% today on my small account. That right there was an achievement. And it was trading the same strategy I trade every single day. It was just that today the market was really hot. It was really connecting, and so I said I need to push hard. I'm not going to walk away just because I'm up $500 on the day. If I'm having a good day, I'm going to try to make $1,000, $1,500. And by being aggressive, my best days have gotten that much bigger. So instead of capping my winning days and saying, oh, anytime I'm up 200 bucks, I'm going to throw in the towel and walk away. Now, sometimes beginner traders do that, and I used to do that actually as well. I realized that when, I'm having a good day, I need to be aggressive. And then that way I'm allowing for bigger green days and bigger hot streaks. And on the flip side, on a red day, that's the type of day I need to cap my losses. So don't go below 1,000. If you're below 1,000, don't take new trades. And that's allowed me to really sort of reverse that profit loss ratio. Because in the past, I traded with a negative profit loss ratio. I was trading where my losses were bigger than my winners because I would allow myself to get too aggressive. I'd allow myself to go into the red. Now I really turned that around in 2016, and I'm really happy for for the results. So now, 2016 was a great year, but 2016 is in the books. So 2017, what are my goals? All right, well, goal number one is to start the year with a $583 small account. As many of you know, I was planning on starting that account with $700. I funded it with $700. What I didn't realize was that my platform fees would come out on the first of the month because I funded the account in December. So I ended up actually starting with $583.15. As of today, I'm up to $3,600 in equity, and my goal in 2017 is to grow it to $100,000. Now, I hope to be able to do that in 2017. I think I can, but time will tell. Right now I'm 3.6% of the way there. So, here's to getting started and a strong start. I think that for me, the first few weeks and the first couple months, first 2 months will be the hardest. I hope to be at $25,000 by March. And I think by the time I get up to $25,000, I'm going to move my account from SureTrader back to SpeedTrader and only trade in that account. And I mean, really, I've been making $20,000 a month consistently for all of 2016. So once my account has grown, I should be able to just pick right back up where I left off and get up to 100,000 pretty quickly. I might even be able to do quite a bit better than that. But at the same time, I can't be as aggressive with this small account as I was last year with my big account. Last year with my big account with $86,000, I could stand tall. I could take a 20,000 share position knowing that if it works and I make 15,000, that's awesome. If it doesn't work and I lose 5 or 6 grand, doesn't really matter. It's not good, but I can handle it. I'm not going to be able to handle that type of loss for a long time with this small account. Even though I have the buying power to take, 5,000 or 6,000 shares, I don't have the risk tolerance to handle the loss if that type of position goes the wrong way. So I'm going to have to keep that in mind and remember that it's just got to be one trade at a time, building the bricks of the foundation. And then once I've got the foundation really solid, and I've built the account up to $5,000 in equity, $6,000 in equity, then I can start to be a little more aggressive, knowing that if I have a bad day where I lose $1,000, it's not going to knock me out. It's just going to, it'll beat me up a little bit, but it's not going to put me out, and back to square one. That's my biggest fear, and I even had bad dreams about this that I blew up the entire account. It's a scary thing, and it's something that could happen. And knock on wood, hopefully it doesn't. But if it does, I'll be here to walk you guys through it and tell you, how I'm going to bounce back and how I'm going to rebuild. During this challenge, again, I'll be, doing this in real time, so you guys will be able to watch me. Those of you who are in the chat room and in our classes, and see me every single day as I am adding to this account, building it up trade by trade. My second goal for 2016 or 2017 is to increase my accuracy to 70%. I traded 66% accuracy in 2016, and I'd like that to get a little bit higher if I can. That means I have to be a little more selective about what I'm willing to trade, but at the same time, as long as I'm making money and I'm doing well, I don't need to get too hung up about the statistics. The statistics will sort of, they'll follow the profits. Third goal for 2017 is to try to increase my profit loss ratio to 1.5 to 1. I would of course love to be at two to one, but I'm not sure it's realistic for me to try to increase it by almost 100%. So I'm going to start by saying 1.5 to 1, and if I can do better, then that's great. That means I have to do one of two things. Number one, I've got to have bigger winners, or number two, I have to have smaller losses. Or if I can do a little bit of both, then I should be able to get my profit loss ratio just tweaked a little bit higher. Goal number 4 is to continue to help thousands of traders at Warrior Trading on their path to trading success. And so I'm excited that in 2017, I'll be having a group of traders fly out to trade side by side with me. We're going to do 2 seminars this year. And I'm just going to continue doing everything I can to help beginner traders avoid the frustrations that I went through. So, everything that I've gone through, all of these experiences, this has all been trial and error. I've learned all of this the hard way. And I love it when I'm able to work with a beginner trader and help them avoid those same frustrations. John's one of our students that last year made $160,000 trading side by side with me. So I'd love to see more traders, just like him in that same position where they learn the strategy, they trade side by side with me. We're all looking for the same setups, and we trade together as a team over at Warrior Trading. Now, 2017 so far is off to a great start, but we're only 12 days in. So I wanted to make sure that I got this 2016 annual report uploaded and and recorded so you guys can see it, so you can ask me questions, and so I can sort of set the positive intention for 2017. I think it's going to be a great year, and I'm so excited to be able to be doing this side by side with so many awesome traders in the Warrior Trading community, and of course all of you who are tuning in on iTunes and YouTube and Facebook. All right, guys, so what I'll do is answer some questions for those of you who are watching and have some questions. And those of you watching and listening to the recordings, please feel free to comment, thumbs up. I'll make sure I reply back to comments. I log in pretty much every day to answer them. So even if it's a few months from now, I'll make sure I get those questions answered. All right. Francois, Canadian trader. We do have a lot of students in our chat room who are Canadian, and they trade at a couple different places. Some of them trade with Questrade, some of them trade with Interactive Brokers, and some of them trade with SureTrader. So it kind of depends on your account size, what you're looking for. This is one of the things with brokers that there's not one broker that's good for all Canadians. It depends on what type of trader you are. If you're a high-speed trader, if you need hotkeys, if you need fast executions, SureTrader is probably where you want to be. If you prefer to keep your money in your country, you've got a larger account, Questrade might be better. Interactive Brokers is also a fantastic place to trade. So it just sort of depends on where you're coming from. One of our students recently asked me, as he's getting started, he said, "Ross, is it really as easy as you make it look?" And I recognize that this looks easy. And what I should have said at the very beginning of this annual report is that as easy as this might look, all of this is the result of a lot of hard work. I spent years studying 15 hours a day and trading and studying to get to where I'm at today. And even today, it's evening time. I'm still working and doing my thing. My entire world right now revolves around trading in the morning, working with students in the afternoon, studying, uploading videos to YouTube and stuff like that. It's really nonstop work. If you expect or you want to be in the top 10%, if you want to be one of those traders who makes a lot of money and is really successful, you have to be willing to work hard. And I know that there's a lot of traders out there who have worked just as hard as me, if not harder, and who have not had the good fortune of being successful. And that's why one of the things I said earlier is that traders fail not because they don't try hard, but usually because they don't have the right framework, the right template, and the right tools. You need all of those things together in order to be successful. But at this point, for me, trading is easy. It's something that took me a long time to learn how to do, and now I've got it. So if you think of something else that's, really hard to figure out, here's an example. Skiing. Skiing is easy. On the surface, skiing is pretty easy, but doing tricks is hard. Now, anyone who's a skier can attest to the fact that this is one of those things that's really challenging. And Ryan, I think that you're watching, so you'll be able to back me up on this. When I was skiing, as a teenager, I wanted to start doing the tricks. I wanted to start going off the jumps and doing the 360s and stuff like that. And this is actually funny how similar this is to trading. I would go off the jump and I would start to spin and I would go not 360 degrees, I would go like 270 degrees. I would go like 3/4 of the way around and then I would stop. And I would just land, and then I would fall immediately. And I just kept doing that again and again and again. And it wasn't because I didn't have, the skill. It was because it was totally mental. I couldn't commit myself to making that 100% turn all the way around. And you have to guide, with your shoulders and with your head. And then finally, one day, I got it. And it was just like, boom, I got it. Like, spinning the pen on my finger, just finally one day, it just went. And I was like, wow, I've got it. And even if you try to do this, if you don't know what I'm doing, it's one of these things that it's like, what is he doing with that pen? This is easy. But you try, you can't get it right, and then finally it connects. You land, and from that point forward, you've got it. You got over that hurdle. And that's trading is so much like that. It's this mental game. And so many of us struggle with keeping the losses small, minimizing the losses, maximizing the winners. We fall into these bad habits of having big losses and small winners. I recommend a lot of traders to read this book called Trade Mindfully by Gary Dayton. I don't have a copy of it right next to me at the moment, but it really is a great book all about trading and the mentality that you need to have as a trader in order to be profitable. I actually think I might have it up here on the counter or up on the shelf, but in any case, I don't know where I put it. Trade Mindfully. It's a book I'd recommend you guys check out. You can find it on Amazon and stuff like that. But just being able to overcome those emotions, because you can have like a total mental block stopping you from being able to do something. Another thing, I struggled for a long time to be able to do a flip off a diving board in a swimming pool. It's another one of those things. I'd commit only 70% of the way, and then I'd end up, being upside down. I mean, it's just a mess. It's mental. You physically can do it. So I really believe almost anyone out there could be a trader. It's just getting your mental game. It's learning a strategy, having the template, the framework, and then having the right tools to make it happen. So, the good news is that there are people out there, like me, who are happy to help you, happy to help you through that learning curve. And I'm working with, so many students right now over at Warrior Trading, helping them achieve their goals, helping them on their journey to success. And, for everyone, success is a little bit different. It's not defined as the same thing for everyone, but, I think for me, an extra $50,000 a year was success as a beginner trader. And you know what? That's $200 a day. $200 a day. I've been making more than that in the last 8 days with $500 in my account. So I really think anyone with a little extra money has the potential to trade. It's just can you overcome the mental side of it? I have a student right now who he's retired and he's spent his career as a pharmacist. As a pharmacist, he was always taught that you can never make mistakes. You make a mistake as a pharmacist and something really bad happens. And so he's feeling really trigger shy. He's afraid and nervous to take trades because he doesn't want to be wrong. And I've, kind of had to break him of that, because it's okay to be wrong as a trader. I'm a guy who was wrong 34% of the time last year, and I still made $200,000. That certainly wouldn't be true if you're a pharmacist. If you're a pharmacist and you're wrong 34% of the time, you're fired. You're a bad pharmacist. But As a trader, you can be wrong 34% of the time and make money and be considered, very successful. I'm in the top 5% in terms of my income just from trading in 2016. So, it's not about being right 100% of the time. It's not at all. It's about learning how to minimize the losses. So, it's like every time I get in, I've got a really tight backstop. It's like, rock climbing, and I've got this constant belay, this rope that's constantly pulling me up. So if I do fall, I only fall back a little bit. And, I love going rock climbing, and that's something that I'm thinking about. You can have automatic belaying devices that pull you up and just kind of like, keep you going, so you're never going to fall that far back, or you have someone standing there to help you. For me, in a lot of ways, with my trading account, it's my broker that provides me that backstop by having the max loss on the day. So I can never have, too deep of a drawdown. And although maybe I could do a little bit to improve that with making sure I don't break the rules by taking crazy big size, and even with that, I could tell them to restrict my share size. Don't let me take more than 20,000 shares. And that might not be a bad idea, because there was at least one time last year that I meant to take 2,500 shares and I accidentally bought 25,000. So, these things are available. You can talk to your broker about it. They'll help you become a better trader. You just have to reach out. There's a lot of people out there that'll help you. I'm certainly one of them, but your broker's also one of them. All right, guys. So, with that said, you guys are welcome. I'd love to have you go over to warriortrading.com, check out the website. Many of you are already, members, and you're just watching the recap. So I hope you guys enjoy. And Steve, to answer your question about trailing stops, I don't use trailing stops. I don't use trailing stops because of the fact that a trailing stop always stops you out when the stock is going down. And because of slippage, your loss is always going to be a little bit bigger. So I'd rather sell when the stock is going up. So what I do is I put out orders as the stock is going up to sell into that strength. That way, by the time the stock is going down, I've already sold 3/4 of my position. And I've tried that method of saying, I'm going to hold the whole thing until I get, one red candle. Well, just today, I saw a stock that went up. I tried to get in at 810, and my order didn't get filled, so I didn't get in. And it went up to 880, and I was telling the people in the chat room, look, guys, if I was in this, I would be totally selling half. And I was thinking, yes, it looks like it could go to 9, but at the same time, I personally would be selling half. Like that, it went down to 770. Just like that fast, it dropped a point. I mean, you literally with 3,000 shares, you could have just gone from being up, $1,500 to down 900. That's how fast it can happen. So that's why I like to stagger those orders out, sell half, sell another quarter, start to pay myself. And this strategy works. By doing that, as soon as I'm in a trade that goes up 30 cents, I've sold a small profit. So let's say I sell half, 2,000 shares, I'm in at 810, I sell half at 830. So I lock up 200 bucks. I put my stop at break even on the rest, and if it drops back down, I walk away with $200 profit minus commissions. That's not bad. Now, if I was doing that same trade with a trailing stop, I may have held the whole thing up, $400, not locked in anything, and then I have a 10-cent trailing stop, but then the stop triggers with slippage, and I get stopped out break even, or even for a loss. And I've had that happen. So that's why I personally don't use trailing stops. But again, these are day trades. These are really fast moving trades. These aren't swing trades or long-term positions. So depending on your outlook, that's going to impact the strategies that you would use with scaling and stops. And Pedro, for me, trade ideas is my number one resource. It's really what I call my secret weapon as a trader. My scanner settings are the secret weapon, because these scanner settings. Oh, and that was the last thing I was going to show you, that that Warrior Trading this was a login map on just a ordinary day where we had students logging in from literally all around the world, and even you guys who are watching right now on the Facebook live feed. Give me a shout out where you guys are watching from, because I bet we've got people from all over the place. We had on this day 2,000 people in the chat room. Most of the people are on the East Coast, but we've got people in Hawaii, Alaska, South America, Africa, Europe, a lot of people in Europe, Asia, Australia. I mean, it's pretty cool. So Warrior Trading has gone global. All right, now let me show you, let's see, I'll show you my scanner settings back here. So these are the scanners that I use every single day to trade the markets. These are what give me, pretty much all of my ideas right here. And I've programmed these. These are very filtered to look for very specific types of stocks. And for me, they're all looking for stocks that have the high relative volume, the low float, and moving up 5% or more. And then I could just manually look at it and wait for that first pullback and that type of thing. Again, I'm simplifying this a little bit. Just it takes a lot of practice. You've got to test this out in a simulator. Trade side by side with me in the chat room for a month and get a sense of how I'm doing it each day. I know for me, within a month I was hooked. I was like, trading is what's going to change my life. I just need to be able to master it. What I didn't realize is that it would take me almost 2 years before I found any success at all. And that's why I started Warrior Trading. Started it as a blog and then built it into a chat room to help beginner traders speed up that learning curve, to help traders connect, and to help me build a network of other traders. And it's really taken on a life of its own, and it's been an amazing experience working with this many beginner traders. So Michael from Santiago, Chile, welcome. Awesome. All right, guys. So let's see. With that, I think I will call it an evening. And again, you guys feel free to email me, ross@warriortrading.com, and hopefully I'll see you over in the chat room or in one of our classes at some point soon. All right. Thanks, guys.
Let's be honest. If you made it this far, you must have really enjoyed that video. So what's stopping you? Subscribe right here and get email alerts anytime I upload new content. Until then, happy surfing!